On a year-to-year basis, the price of gold has increased by nearly 12%. It is currently trading at $1,930 an ounce and projected to breach $2,000 an ounce again by the end of this year. According to Makwe Masilela of Makwe Fund Managers, gold is often used as a hedge against inflation, geopolitical tensions, or fear of a recession.
When you get to an environment where interest rates are low, then it means the opportunity cost of holding that metal, they are low as well, because you are not missing out on other stuff. But now when interest rates start going up, then the opportunity cost starts increasing. And also what impacts it is that because gold, just like most other metals, is priced in dollars. Also, you have to check what is happening with the US dollar. And now in an environment where the US dollar is kind of weak, that itself, it makes it cheaper for holders of other currencies to be able to afford it. So we need just to know that this is non-yielding at all. Unlike other metals that maybe they'll do well because they get to be used as industrial metals, stuff like that. So gold basically is used as a way of storing value.
While in investment terms it is valued in one way, in the jewelry industry it is valued differently. According to the International Gem Society, gold jewelry for the most part is priced for the creativity, workmanship and exclusivity of an item. Stock items such as engagement rings, earring mountings reflect gold ounce prices the most. The owner of NQ Jewelry, Ngobile Nkosi, says although the economy is battling, but high-end jewelry pieces are still being bought.
The jewelry industry globally is sitting on over 250 to 300 billion US dollars and is set to surpass 500 billion US dollars in the next 5 years. So there's a huge demand for high value goods. There's a huge demand for luxury products. And the Jewelry Village store that I own at the Monte Casino is exactly a great platform for South Africa and up and coming designers to actually come and showcase and sell their products from there. Yes, we do sell most of our goods to international customers because of obviously the dollar and the rand exchange sometimes works in their favor. But we're also seeing a lot of, through our partnership with the Proudly South Africa, we see a lot of local people also turning up, coming to Monte Casino, to the Jewelry Village store and buying our local products, which are produced by local designers. I mean, for example, we have about 20 small businesses that are supplying through our stock.
The jewelry industry operates essentially on a gold price on date delivery. This means that manufacturers, wholesalers and retailers don't know from one day to the next what their gold purchases or unfulfilled orders are going to cost. When the order is filled from a supplier, the daily gold price is consulted and the metal is priced accordingly.
For example, if my ring was costing me to make, or rather on a retail price is 100 rands today, and tomorrow the price is up 5% of gold, literally my ring is up 5%, because I need to be able to replenish the stock. So if I sell it for less, I'll be losing, because when I have to replenish the stock, I'm still going to pay for that increase that has been in the metal.
While entrepreneurs like Nkosi are contributing to the economy, a crisis is escalating in the mining industry. Illegal miners are increasing in numbers and possibly chasing the metal's value. Illegal gold mining operations have become a major challenge, with as much as 5% of South Africa's annual gold production lost to illicit activities.
Remember, behind the illegal miners, you've got buyers, you've got middlemen, and those people, they tend to understand the fundamentals of the industry more than the diggers themselves, because those guys go down there and dig. So at the end of the day, if there's demand and supply issues, if the pricing is right, then definitely, if I'm a middleman, then I'll demand more so that I can make more money. So yes, it does play a role, because now you look at what is it that they'll be selling it to. Take an illegal miner. If prices are at a certain level, probably then they're fetching better prices, then it's worth their while to risk their life, go down there. But if the price is low, then definitely buyers out there will be prepared to pay low. Unfortunately, the pricing of gold, just like other metals, gets to be more transparent, and I'm guaranteed they know what is happening with the pricing.
Business owners like Nkosi are the faces of beneficiation in the gold industry. This means that there may be small business opportunities in the jewelry industry that can stave off unemployment. The South African Diamond and Precious Metals Regulator is actively supporting the development of particularly historically disadvantaged persons to enter the industry. Its role is to issue trading permits, which is a requirement before one can embark on this journey, but it is concerned that permits lie dormant after they are issued.
Most of them are inactive, which then talks to the structural and systemic challenges that we have. For instance, the issue of access to funding, the issue of access to markets, which are primarily the two primary challenges that we're dealing with that are responsible for those inactive licenses. So to the extent that we have a large number of them, we appreciate that. But again, if they are dormant, then they are not serving the purpose for which they are supposed to serve in terms of addressing unemployment. So yeah, that's the predicament and the challenges that we currently face.
According to the World Gold Council's Gold Media Outlook 2023, should the expected mild U.S. contraction materialize, a strong first half for gold is likely to give way to a more neutral second half. In this scenario, gold would draw support from a weaker U.S. dollar and stable bond yields. On the other hand, gold would face challenges if tightening continues for longer than expected. Diabosito, SABC News, Johannesburg.